Good morning, everyone. Today is Wednesday, March the 11th, and welcome to 7 Investing Live. This is our live stream interactive event where we showcase and spotlight several of the stock market's most intriguing opportunities. If you do want to see our official recommendations and our monthly best buys, please check out 7investing.com or 7investing.com/subscribe if you're ready to get started where your first 7 days are absolutely free. My name is Simon Erickson. I am the founder of 7 Investing. Today's show is going to be a good one. I'm titling it Apple versus Inflation. We're going to talk about the King of Cupertino's latest product lineup, why several of these options are lower priced than their previous generations, and what that's going to mean for investors. So it's going to be all things Apple here today. I want to kickstart this today. Today is March the 11th. This is kind of a big day for Apple fans because you just got the official release of several new Apple products. In fact, if we could put up the website, perhaps the official announcement right there on their newsroom, Apple released several new products, including the Apple Neo. That's an all-new product. It's similar to a MacBook that's a little bit slimmed down from that. The iPhone 17e, the next iteration of the iPhone. Hard to believe we're already on, number 17 these days. And then, of course, the next generation of the MacBook Air, the M5 powered MacBook Air 2. A lot of cool stuff out there. I think their products look sleek. There they are right there. Thank you very much, Heather. You see the Neo, the 17e, the Air, the MacBook Pro. You kind of see this is the lovable ecosystem of Apple's products, now slimmer. And the interesting piece of this to me was lower priced. And Heather, I want to bring you in on this conversation on the Neo. The Neo has got some good performance, right? This is a new laptop. It's got 16 hours of battery, all day battery usage. A 13-inch Retina display. It's got a 1080p camera, and then it's got a new Apple A18 custom processor that's in there. This is being priced at $600 for a laptop compared to the MacBook Air 13-inch, which is a similar size, which is priced at $1,100. The Apple Neo is about half the price of what Apple generally releases this type of MacBook at. It's saying it wants to be an affordable price point for consumers of all types to get into the Apple ecosystem. Heather, this is where I want to bring you into the conversation because you are our video producer. You are using the graphics and the video capabilities of products like these much more than I am. What is your opinion on Apple? Does it have an edge over the other competitors out there? And are you excited about the Neo coming out?
Yeah, I've been using Apple products for 20 years now. Uh, so a good long while.
Wow.
Um, I personally have found that Apple products work a lot better with the Adobe Creative Suite than PCs do. I think there's definitely video editors that would disagree, but they just integrate better, work faster. I actually recently went to upgrade my editing computer and was thinking about going with a PC because I wanted a gaming computer, but it also is now cheaper to buy a Mac with the same specs as a PC, which we'll get into, which is wild. Mac has never been the budget option. There have been some issues with Mac and their planned obsolescence. And I mean, there's been lawsuits, which is not ideal. And it's been very frustrating as a Mac user. Don't love it. But the Neo is a really interesting product because I don't know. I need to look into it for video editing and how feasible it would be, but I don't know if they've ever released a laptop for sub $1,000 before. And this being almost half that is a really an interesting market move.
It certainly is. I wanted to ask one more thing to you before I jump into some of the other parts of the press release here, but that you've used Apple for 20 years. Is that just a personal discretionary decision? You just love Apple products, or you feel like you are locked in and it's really hard to change your setup and get anywhere else?
A bit of both. I mean, I've had an iPhone for 20 years now.
Yeah.
And so it does all work together. Um, but it's honestly that I feel like I'm stuck in the creative suite that is Apple and Adobe working so beautifully together. And that's just kind of, yeah, it. I do think many people are stuck in the ecosystem though. I know I've set my mother-in-law, and I think a lot of people have set less tech savvy people up with the iPad and iPhone and maybe a MacBook or maybe now this Neo. And it's like it all works together and you do not want to interrupt that ecosystem.
100%. And I'll tell you, when I saw the announcement of the Neo at $600, I'm not even a self-proclaimed Apple person, but I wanted to buy one. I was like, wow, $600 for, cutting edge laptop like that. That sounds right up my alley. I think this is going to work. That they're kind of testing the demand curve and seeing what people that might not want to spend $1,000 or $2,000 for an Apple product before. Would they spend 600? Yeah, maybe. And maybe this opens up a new user base for them. In addition to the Neo, we just talked about the Neo. They do have, of course, the MacBook Air, the newest release on that, and also the iPad Air. Those are the more expensive ones. Like Heather just mentioned, the Neo is about half the price of the typical MacBook Air. They did release the newest version of the MacBook Air. That's got the M5 processor. That's the most cutting edge chip. Good for stuff that's using AI, LLMs. If you're doing gaming or video rendering and things like that, the more expensive one that's coming out at $1,100. They've got the iPad Air, which are also testing the low price point of $600. And then they've got the iPhone 17e, which they're marketing as the more powerful and also more affordable new member of the iPhone family. It has got twice as much memory as its predecessor, now 256 gigabytes, and yet it's at the same price, $600. So again, this is kind of interesting. We're so used to seeing Apple coming out with the latest and greatest, and we all probably agree at this point that Apple is releasing very good products. They're very high performance. You got people that love these products, but they're typically at a premium. They're much more expensive than other products out there. And it's interesting to see now, not only the price point that they're testing at $600 for a lot of these prices, but like you mentioned, Heather, this is now price parity with a lot of PCs you could have that are inferior in performance to what Apple's offering out there. So I think this is really interesting to see the announcement of this, and as Apple's testing out the demand curve. Let's take this one step further and look at it from a business perspective, and then we're going to look at it one layer deeper as an investor perspective. But I do want to talk about margins at this point, because Apple is making a conscious decision to offer lower priced products in an inflationary environment. What do I mean by inflationary environment? Well, we've got tariffs that are pushing up the prices of a lot of components that are coming into the United States from Southeast Asia. And we know already that Apple has got a supply chain that is based primarily in China and in Taiwan. They're moving their processors that are produced from Taiwan Semi, and the components that are coming out of Foxconn in China, they're bringing them in the US, and that's been hit by a lot of tariffs here recently. In addition to that, we just talked on the last show about Micron technology and how the pricing of high bandwidth memory is going through the roof recently. Apple is definitely not insulated from that. Apple's a big volume, customer of these memory providers, but still it's not immune from the increase in memory prices. So that's pushing it up too. And then just generally the prices of a lot of other components outside of memory, outside of processors, just electronic prices are going up right now. At the same time, Apple is maintaining or lowering its price point for its products. So it's Apple versus inflation here. Is this going to pay off? Wouldn't its customers be loyal enough to just accept the higher prices? I think that Apple could probably go out there and say, hey, we love you, Apple fans. We love you, Apple longtime customers. We're going to have to increase the prices because memory is going up and tariffs are going up. They're not doing that. They're now saying, hey, in this inflationary environment where everyone else is raising their prices, we're going to put a price point out there of $600 on a lot of new products and see how this goes. Why do that? Well, one, it has a lot of loyalty. For one, people that have been buying Apple products are now thrilled to go out and get the latest generation one at the same price or at a lower price point again. So you got the refresh of the product life cycle with existing customers. Two, new customers, myself included, who am not a big Apple guy, but I'm saying, wow, for $600, I might go out and buy an Apple laptop. This might be the price point that I've shied away from in the past, but I'm willing to go out there. They're going to expand their pool from that as well. But then, of course, Apple is not just a products company anymore. It's now a services company. Why is it adding more and more storage and memory for the devices that it's selling? Well, because it wants you to go out there to the App Store and download more things. And of course, Apple gets a pretty nice cut, 20 to 30% cut of any app that's downloaded through the App Store. So the services component, the tangential things in addition to the products itself, if you can get a lower price point and more people buying those products and then also using more of its other services, that's a big win and another income stream as well. And then in addition to that, if you're not part of the Apple ecosystem yet, if you have resisted for a long time, maybe you're an Android person like I am, if you get into the Apple ecosystem, you start to love it, you might start to buy other Apple products as well. Maybe you want to buy the Apple Watch. Maybe you want to get into the Apple VR headset. Maybe you want to get into the newest generation of products that Apple's going to release out there. If you get a low priced product in your hands and you start using it, of course, that opens you up to other ideas in the future. So a lot going on with this. I think it makes sense from a business perspective. Apple is a fantastic company. It is a very large company. It is a very profitable company. And now I want to look at it from an investor's perspective of, is this a good move for Apple? Now is the perfect time to show that graphic if we could. This is from Fiscal AI. It shows Apple's increase of revenue over the past, where are we, 3 years here. We just got the most recent results here from the first quarter. But you can kind of see, look at Apple's, first of all, revenues. Revenues are in the orange if you're looking at the graphic live. Total revenue, no problem growing total revenue. They get more and more orders each and every quarter. That has steadily improved. In fact, in the first quarter, we got revenue of $143.8 billion. That was up 16% year over year. Very, very strong. If you're looking at the blue line of the chart as well, you also saw an all-time high of gross margin. Gross margin of 48.2 was an all-time high for Apple. It was a high end of their own guidance, and it was actually up 100 basis points sequentially. Sequentially from the previous quarter, there you see 47.2%, up a full 100 basis points, 1 percentage point. In the first quarter, they're up to 48.2% here recently. They said that was due to a favorable product mix. And of course, we know Apple is no stranger to volumes at very, very high levels and economies of scale. They're pushing these out. You got new products going out there. You go out there and you sell them at good price points. You increase your gross margins. And then even more impressively is, in addition to everything that they've done well from the business side, they churned out $54 billion in the quarter of operating cash flow, almost half of revenue, almost 40% of revenue, that they then used to return over $30 billion to shareholders, primarily through $24.7 billion of buybacks, of share repurchases during just the most recent first quarter. This is in the middle of a $100 billion share repurchase program that they've authorized. You can see there in the purple of the graphic, the outstanding share count, including all the dilution from options and management incentives and things like that, continues to decline. This is something Apple's been very good at. Even as large of a company as it is, it still continues to return its capital to shareholders primarily through that buyback. And then even more impressive than this, they gave guidance of the upcoming second quarter of 13 to 16% revenue growth and 48 to 49% gross margin here coming up. They've got $54 billion of cash net of all of their debt on the balance sheet right now. Okay, so how do you continue to guide for a gross margin that's going to be 48 to 49% in the upcoming second quarter, knowing that you were just at 48.2, an all-time high for the company, exceeded the high end of the guidance? They always sandbag a little bit because they want to be conservative in their forward guidance. So Apple, at the same time that it is launching lower priced products at a global scale, is also getting to have its cake and eat it too by saying, yes, lower priced product, and we're going to increase our gross margin profile. It shows the power that Apple has of controlling its own supply chain, even in an inflationary environment. And still, the economies are still kicking in. You can offer a lower price product and capture the margins at the same time. I think this is a fantastically run business. The execution has been very, very good. They've been very, very diligent in controlling their own costs with their suppliers, in inking long-term supply deals that are immune in some ways to future price increases, and then also knowing a price point that consumers are willing to pay, and also giving them the gross margin profile that they want to have. They could go out there and say, hey, we've got inflationary pressures, guys. We're going to pass along these costs to you as a consumer. Not doing that, holding the price point steady or lowering lower price points and still capturing 49% plus gross margin profile. I think this is very impressive. For me, as a long-term Apple shareholder and someone who's a big fan of this stock, I think that when you couple in the business being run very, very well as it is, and then also the shareholder return program that they've got that's very aggressive, mostly through buybacks. You've got the dividend there too that they increase a little bit every single year, but primarily the repurchase and the authorization being $100 billion right now. Apple is just a machine. This is an ecosystem machine that is a compounding machine for long-term investors. I see nothing going on right now that would discourage me to be a long-term buyer of Apple stock. Heather, I'm going to take a break there. I'd like to bring it back to you, see if you have any questions or even insights about what's going on with Apple there. Thank you for your thoughts on the newest product lineup. It looks like a pretty good business that's running itself pretty well as well right now.
Yeah. One thing I forgot to mention beforehand is Apple, the way that they've been building their chips in-house, and is that they've integrated their chips, the new M5 chips, and I think the M4 chips and 2 chips. And so that even though they have technically less RAM, it's like functionally more RAM. I'm not explaining this super well, and I'm very sorry to all the techies out there, but it does mean that you can get away with less RAM, but still have a significantly faster computer. And I will say that, like, that's not just from experience, that does seem to be true. I was able to, on less RAM than you would think, export some pretty wild After Effects, and it just works and goes pretty quickly. It is very impressive what the new M5 chips can do. Um, do you know if Apple's actually managed to become tariff exempt last year and how long that lasted, or did that disappear? You know how tariffs, everything was up in the air. I don't know. I heard about that, and then I never heard anything further.
It's a good question. We have to look into the long-term supply agreements, and
Mhm.
I've got some homework on doing that if we wanted to look into those. But if you don't mind, if I can skirt that question, Heather, and touch
Mhm.
on something else you just mentioned there about the chips, because you
Mhm.
mentioned the M4 and then now the latest iteration M5. Those are custom silicon, which means that Apple is designing its own chips, obviously, and then using them in its devices. But they're handling a lot more of the processing right there on the chip rather than in the cloud and the data centers, right? So if you've got a large language model, or you're doing any kind of AI inference, machine learning inference, or you're doing video rendering, or anything that needs to be on the device itself, you're not sending it back and forth to the edge or to the cloud. It's the chips that are doing it right there on the device. The other thing that's amazing out of this is that at a time where Google is spending so much money on capital expenditures right now, Apple is not. It is leveraging its long-term agreement with Taiwan Semiconductor, who's manufacturing the M1 chips, the custom Apple chips that they're designing. They're then offloading to Taiwan Semi to do the manufacturing, and then even working with companies like Broadcom, and we've talked a little bit about them, to design even more custom ASICs too. They want to allow others to play a part of their ecosystem while avoiding the balance sheet risk of the capital expenditures. We might even, and thank you for the reminder on this, because I totally forgot about to talk about it earlier. Let's look at the capital expenditures that Apple is spending versus some of its other hyperscaler peers. I mean, we showed this on a previous show. I think we showed this last month at some point, but look at how Apple's CapEx has actually declined over the last decade, at least in terms of quarterly capital expenditures versus Amazon, versus Microsoft, versus Alphabet, versus Meta. You see these guys out there that they're up against almost boasting and beating their chest saying, hey, guess what? We're going to spend $100 billion in CapEx this year if you're Amazon or Google right now, or Alphabet. Meta's doing the same thing. Apple, no, we're good. We're not going to go out there and spend a ton of this. We're going to let the people like the Taiwan Semis out there, who at last time I checked Apple was more than 20% of their overall revenue. Let them invest in the infrastructure. Let them do the manufacturing and spend all the money on the equipment. Let Apple focus on doing the design of those M4 and M5 chips, and then the relationships with customers who love them because of the ecosystem. That's what Apple's good at. It's not as expensive as a lot of its peers. And that's why you see Apple paying an aggressive dividend and a very aggressive share repurchase plan. That's different than a lot of their peers out there. I really like that as an investor.
For sure. And it's definitely getting to the point where, excuse me, PC builds are becoming so expensive that because of the supply chain problems.
Yeah.
And now all of a sudden, the idea of being able to buy an all in one package with Apple that has previously been kind of a downside has become such an upside for everybody. And yeah, for the first time ever, has become the budget option, even for high end computers, which is just not something I ever foresaw happening.
The do-it-yourself crowd doesn't want to go spend as much money as they have to on memory and processor. Just buy an Apple for $600 and compare, right?
I mean, my all-in Mac Studio, which are very nice, they're very powerful computers, cost half as much as the equivalent PC would have cost. And even 3 years ago, that would have been opposite. just because
yeah.
RAM and memory and the processing cards, the NVIDIA card I needed.
It's going to be really interesting to see how this plays out. Again, we've seen this reverse disruption approach in the past. Tesla put out the Roadster first, a super high expensive, model out there. And then it came out, years later with the Model 3 that was the affordable option. You're seeing Apple, who's always been priced at a premium, doing the same thing now. Testing the waters, testing the demand curve to see if they can get bites at $600 a product. Keeping in mind that opens them up to the ecosystem, that opens new customers up to the services and all the other things. This was a fun one. Any final thoughts? Any final words on Apple, Heather, as we kind of close out the show here?
I think with the lowering prices, I wonder, they've always been known as this like quality company. And I definitely wonder if that means like they've always invested in new technologies to increase the quality of things. And like they've invested in the really cool different glass technologies, the anti-scratch glass. And if they're starting to drop prices, it is interesting to see. It'll be interesting to see if they start dropping quality or stop investing or researching and improving quality constantly. It does make sense that the fact that they design their own chips and have Taiwan Semiconductor make them, that they are able to produce them more inexpensively, would explain why they are able to do all of this. Yeah, I'm really curious going forward how this works, because it is a major shift, because using the iPad, the iPhone has been a way to get people into the ecosystem on a lower price point. But this MacBook Neo is very different from anything they've done before. And it's not quite Chromebook cheap, but it is going to get a lot of people. And it's also going to be a lot of kids or young adults' first entry into Mac. And I think it'll be something that gets a lot of like teenagers and college kids into the ecosystem early.
Is it a fair statement to say that you would not trade down from a power user at power price point and the best processors? Would you trade down to the Neo, or are you pretty happy with what you've got at a higher price point for Apple right
now? I couldn't, for what I do, go down to a Neo. I might get a Neo as a travel machine. Honestly, I'd probably go for an Air, as I need to check the specs on it. If it can edit video well enough, it would be a great travel machine. But yeah, as a video, not just a video editor, but someone who does 3D graphics and After Effects just eats power. So I'm not the person it was designed for, but it is a really interesting, and it would be a great travel computer, because I use a desktop. I don't use a laptop right now, and I would love a laptop.
I do love Apple's long-term strategy. They're always thinking 3 steps ahead on how to maximize profits and cash flow, and it's been good for us as investors. So kind of an exciting day here. March the 11th, today's show, right at the release of a whole boatload of new products coming out from Apple, now officially available as of an hour and a half ago. We got this timely announcement here with Apple doing that here today. Appreciate you tuning in for this show. I want to put out a promotion that if you do watch these shows and you enjoy these, but maybe you don't have the time in the middle of the day to watch them live, join our investing newsletter. 7investing.com/newsletter is actually where you can get the recap of all these shows and a short recap of the things that we talked about directly to your inbox 3 times a day. Again, that's our email list. It's totally free. There's no commitments, no strings attached. But if you do want to recap on some of these insightful things we're discussing right now, whether it's Apple, whether it's Semiconductor review, whether it's the watch list review we just did, I think it's kind of neat, to get a really in-depth, insight-dense recap of what's going on out there in the world of innovation right there in your email address. Again, 7investing.com/newsletter if you want to sign up for our free email list. I'd like to start promoting that because I think that's really useful. We give a recap of every one of these shows through that as well. Speaking of upcoming shows, man, we've got a good one. We've got a controversial one coming up here on Friday. This is going to be a spicy one because we're going to talk about a feud between 2 frenemies in the healthcare industry. We're going to talk about Novo Nordisk versus Hims and Hers on Friday. And this is an interesting one because Novo Nordisk has been really big on pushing its weight loss drugs out into America. Hims and Hers has caught on as a direct-to-consumer provider of those. I wouldn't say distributor so much, but a provider of those drugs through compounded versions of those drugs. There's a little bit of a feud going on with Novo Nordisk and Hims and Hers. We're going to talk about that more in detail. And I'm going to share my insights, at least as I see it as an investor, on Friday's show coming up here on March the 13th. So it's going to be really interesting to see Novo versus Hims. That'll be our Friday show. And then, ladies and gentlemen, I have a birthday coming up here in March. So I'm going to put together a special episode either next week or the next week after that. If you're an investing nerd like me, what more can you be more excited about for your birthday than having a special episode on quantum computing? We're going to not only have, hopefully, Tiernan Ray, one of my favorite investors, used to work for Barron's for decades, been really in touch and in tune with the quantum computing space. And I'm also trying to arrange for a representative from MIT's, the Massachusetts Institute of Technology's lab, devoted to quantum computing, to be on our live stream as well as some audience participation too. We discussed quantum computing on a recent show. I said, hey, this is time to go all in on a show to really get the scoop on what's going on with this field and all the innovation with it. So really excited to have that show coming up. I'm going to label that a birthday show just because I think it would be fun, but that's going to be coming up within the next 2 weeks as well. In the meantime, man, I really hope that I can wish you love and kindness in your life. We'll see you again on Friday.